Another regular day for AMC. And by regular, I mean, well, everything else is going up. Everything else went back up after especially the Fed, Jerome Powell finishes, his testimony before the Senate Banking Committee. But even crypto went up. Like 2 to 5%. But here we are yet with AMC, something that was really close, this close from being a red day. But it doesn't matter because this price is not really what does matter. It's fake. It's not real. All right. Let's focus more on what is real now. And this is about an article that came from Citadel Securities today. Some juicy and very interesting news I want to share with you because I believe when you read in between the lines on what they said, you actually see and detect, what is actually coming for those holding AMC stock in the near future. All right. Because this might be really, really big. So today, Citadel Securities posted this article. They got $1.15 billion on potential path to IPO. IPO it when a company goes public, meaning they will have their own stock, maybe Citadel stock or Citadel Securities stock that will be traded on the markets, so it has the potential of getting the company even way bigger. And this money, this $1.15 billion came from two companies, Sequoia Capital and cryptocurrency investor Paradigm. The company said in a statement today, the funds will be used to support global growth and could potentially lead to an initial public offering at a later date, according to people with knowledge of the plans. But here's the thing, folks. When you look at what Sequoia is doing or did in the past, they're really investing into companies. Sometimes once the company goes public, because the share on the market starts trading, they kind of take the money out, or sometimes just remain invested into some of these companies. But this is some of the the examples of companies they work with in the past or help go public and go big. 23andMe, Airbnb, AMP Robotics, Apple is another one, Atari is another one, Aurora, Bolt, Canvas, Cisco, Citadel Securities, Citizen, DoorDash, WhatsApp, Robinhood. They are a big investor into Robinhood. And the other one is really a disruptive capital investor, kind of doing the same thing Sequoia is doing, but really specialized into cryptocurrency / Web3 companies. All right. So it's really those companies investing in other companies. And once the companies go big, they just cash out the money. Why is this important to actually look at this? Because if you look at what Citadel Securities did last year as performance, in 2021, they were ranked the top best performing hedge fund in 2021. And actually, they posted gains of 26.3% in its flagship fund in 2021, besting rivals, right? So the market did in average 24 to 25% last year. So they were kind of in line with the market, even though they beat it by 1.3% or 2%. But why, if they are doing this amount of performance, if they're doing good as everything else, why do they require to have additional money invested ahead of the IPO? Because Ken Griffin owns like 85% of Citadel Securities. If the company is already kind of worth $22 billion, about $22 billion, it means he's already a billionaire, and we already knew that. So maybe I think they are buying kind of early. They want to get early because they have the feeling that once Citadel Securities goes on the market and have its own stock started trading, then it can attract many investors because Citadel is one of the best, according again to this ranking, the best hedge funds on the street. So it makes sense. But what doesn't really make sense to me is the fact that Citadel, if they were doing so good, why did they prevent people from moving money out of the funds? You see what I mean? Because when the markets are doing pretty good, usually you want to take some cash out, and they prevented their clients from doing that. So it doesn't really align with the strategy and with what will be logical to be doing here from a company perspective. So My take on this is potentially they are disguising this as maybe we're going to go later at a date which is not confirmed yet. We're going to go public. We're going to have an IPO. And this is a way for these two companies to kind of invest in us, because Citadel Securities is being created in the 90s. So it's been more than a decade, actually 20 years now that they exist. All right. Now, the second thing is it might be a disguise of them kind of giving money to these guys, this company, which is one of the biggest short sellers in AMC, to actually use it to get to double down on their short positions as the price is getting closer to what is very low now. Or maybe they are already prepping for this to actually be one of the way of raising cash because they are bleeding, and maybe thinking of getting out at these prices because, hey, think about it. If the market already are kind of moving back up on the green, especially the NASDAQ, maybe it means that it may be time to cover. All right. Now, another thing, when you look at this at another perspective, is if the companies really goes public, as they're saying now, it means that they will have to actually disclose the books, meaning they will have to be totally transparent with the SEC and everybody else in authorities on the market, DTCC and all of these guys, agencies, and say, hey, here is everything we do, here is everything we have. Because remember, as of today, they don't have the obligation of disclosing the short positions. But being a public company, even though they don't disclose that, every quarter we will have those books, and they will disclose everything to the SEC and every investor will have access to everything else. Now, the fact that they are using dark pools or they're doing things underneath the table might also be something that will prevent that from happening. But at least it will give more clarity, more insight into what they're doing. And that's why I think this cash money is a disguise, is another way of saying, well, things are not really doing good. Things are not that great, especially as we come into 2022. So let us make sure we have additional money, because $1.15 billion is a lot of money, especially given the fact that nobody on the street as a bank and liquidity provider is willing to work with short sellers, because they keep either giving the money back to the clients, or they're like, you know what? We don't want to be cutting this whole thing because we know what is happening and about to happen, especially as we start 2022. So these might be speculations from me, but I think something is not really, lining up with this whole thing. And I believe the actual main reason behind it might be that, hey, they're trying to cover something here that they don't want investors to know, but who am I? Just a random guy on YouTube. So let's just see how things go for the future. But I bet you that this is bullish. This is definitely bullish for AMC if you ask me, because when they start covering and it seems like they're already thinking about it, it's money time. Let's just see.